Evening, everybody. Happy Tuesday. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Alfonso de Pablos, man on the charts, as he always does. I want to give Fonz his props. I just want you all to know that like 90% of the time when JC or Steve say, Spencer, throw the chart up, do this, do that, they're actually talking to Alfonso. So Alfonso gets all the credit for doing most of the work for that. So shout out Fonz for man on the charts. As always, I just wanted to set the record straight. Sometimes it's me. Usually it's not, right? Usually it's Fonz. So shout out Fonz. Okay. What is happening on the morning show today? We have John Roque on the show. That's exciting. Senior Managing Director, Head of Technical Strategy at 22V Research, aka The Chart Life on Twitter or X, whatever you want to call it. Great handle. John Roque will be on at around 9 o'clock. We'll have Kenny Glick join us a few minutes before that. We'll have Patrick Donawilla join us a few minutes after that. And that is our general plan, I think, for the show today. Chat, are we all good? Yes, Alfonso is the Dark Knight. Exactly right. He's in the shadows. But yeah, he gets shit done. All right, I got JC. I got Steve. Lego.
All right, we are back. Look at Steve Strazza with his bull market glasses on. St. Patrick's Day was last month.
These are my rally mode glasses.
Oh, rally mode glasses. Oh, I don't hate that. I'm not gonna lie.
Should get some.
My kids just wear sunglasses all the time.
Problem is, I can't see anything.
Yeah, that tends to be a problem.
My screen's black.
We got the markets ripping this morning. We got some relationships changing. We got John Roque on the show today. Hello, John Roque. You got kids these days, they don't even know. John Roque is the guy that the best technicians look up to, right? Like, he's a technician's technician. He is the Jerry Seinfeld of technical analysis, right? Like, other comedians look up to Jerry Seinfeld, right, Spencer?
Yeah. That is right.
Yeah, not enough people know about John. Even if everybody knew about John, it wouldn't be enough people know about John because he's that good.
Yeah, I mean, he's OG. He's old school, Lehman Brothers. I mean, he was George Soros's technician. I mean, for goodness sake. So, I mean, dude's been around. I want to hear some stories. A lot of the quotes you hear me say come from John Roque. John Roque he's like a quote guy. Like, he's got a lot of quotes. He also does like a lot of like sports analogies when he talks about the market. So like it's always related with me as a sports guy myself. So shout out John Roque. Actually umpires in his spare time when he's not doing technical analysis for billionaires. Does a little umping. Umping. Did you know that?
That is a thankless job. You do it for the love of the game.
You do it for the love of the game, and you do it for the love of the kids, and especially in some of the neighborhoods up in like up in the Bronx and New Rochelle and some of those areas, like they need all the help they can get. So I appreciate that. Shout out John Roque.
All right, let's get into it,
please. All right, ladies and gentlemen, we've got the Dow futures this morning up 330 points. That's almost a 4% to the upside, 38,650. S&P 500 futures up 85 basis points, almost a 4% as well. 52.30, up 44 handles. We got the NASDAQ 100 futures up 92 basis points, so really almost a 4% for the NASDAQ, leading the way higher, above 18,000, up 170 handles. 30-year bond futures up 40 bips. That's 113.5 for the 30-year. We got crude oil up 1.3% at 63 1/4. Copper up 1.5% at 480. Gold, new all-time highs, 34.65, up another percent and change today. Silver up almost a full percent, 32.80, up 30 cents on the day, with the volatility index down to 32. Over in funny money land, we've got. I want to start today with Bitcoin. But we'll just run down quickly. You got Bitcoin up again this morning, up another 1,300 points. That's 1.5%, pushing 89,000, folks. The real test is coming up here at 90.91. We are just below that. Ethereum up 3.5% this morning. Wow. Ethereum just under 1640, up 56 handles on the day. You got Solana 141 up 3.5%, leading the way to the upside, and the total crypto market cap, Mr. Spencer Israel, 2.74 trillion, inching higher quietly. What do you guys make about this morning's future?
It wasn't so quiet yesterday. But...
Did I hear the Ethereum right?
Ethereum not down.
Wow. You know,
not down.
Everybody's talking now about the decoupling of Bitcoin from stocks.
Slide 2, please.
Are you guys hearing about this?
It's not so much hearing as I am seeing.
Well, we've been talking about it, but now everybody is. Does it end? I don't know.
Man, I'm getting mixed. You know, listen, you got to go. You got your brain and you got your heart. Like, my heart tells me that there is a strong possibility that, you know, they move in opposite directions. That's my heart. My brain, on the other hand, is like, not so fast, right? You know what I'm saying? Like, you feel me on that? Like, I want it to be different, and I have to be self-aware that it's not about what I want, it's about what it is. And while it would be so nice to have this other asset class that does different things, is that the bet we want to make? I don't know.
So you could just show it here, Bitcoin and NASDAQ 100. You don't even, but that's basically what you're showing. You're showing a risk appetite indicator that does move with broad stock market indexes here to show
over half the high beta index is technology, just to be fair. So
right. It should move with stocks. The problem is, if you're going to make some sort of a bet that is based on the thesis that they have decoupled, it's just important to understand and know that these two asset classes, cryptos and stocks, or just say Bitcoin and tech stocks, have never really decoupled over any material time frame. Like, this is about as long as you'll see it go. It's been a couple months now. So relationships do change, but still kind of have to see it.
Do you think that this relationship is actually changing, or is this a short-term dislocation that will revert to traditional relationships?
This relationship has dislocated over the short term due to the volatile environment that we're in, and it's simply a symptom of the U.S. dollar flight that we're seeing. They're simply getting some of that. There's not enough stuff to buy around the world. So what you're seeing out here every day, the price action is clear as day. Stocks are getting sold. Bonds are getting sold. People are taking those dollars and they're buying non-USD assets with them, right? They're effectively getting rid of their dollar exposure. They're buying developed equities. They're buying emerging market equities. Maybe they're buying treasuries overseas. They're definitely buying gold. And they're buying Bitcoin too. I think that makes sense.
You think institutions are looking around, shrugging their shoulders, going, what the hell? Let's buy some Bitcoin.
You know, that started last year, Spencer. So I think there is an element to that.
Remember, it doesn't take much. This is a rounding error, crypto as an asset class. Like, all these things can go to zero tomorrow. It's not going to matter to anybody who actually matters. So for them if a real institution is stepping in, they're going to support the price of Bitcoin. It doesn't take much. I mean, these are tiny little irrelevant assets. So just a little bit of buying from a couple of institutions is enough. You know what I'm saying?
I don't know.
I feel like people forget that. Like, this doesn't matter in real life. You know?
I don't think that's fair. I think you could say that about crypto as an asset class, but not Bitcoin. Bitcoin's market cap is as big as the mags.
Yeah, it's one name.
Yeah. So it would be like
one name, and it's
Apple
stock.
Hold on,
it's one name, and how many hodlers are out there? Like, how much liquidity is actually out there? You know what I'm saying? Like, it doesn't take much, is my point.
I think an institute on Bitcoin, they all do it. That's pretty material for Bitcoin.
Of course, it's very material for Bitcoin.
I know, I'm flipping
That's the point that I'm making, because there's just not that much of it. It's just a tiny little nothing. So yes, I agree.
But crypto's nothing, but I don't think we could say Bitcoin is nothing. Bitcoin has a rather impressive market cap.
What is it, 2 trillion? Are we at 2 trillion right now?
Something like that. It's a
I'll tell
max
you right
7.
now.
As far
I'll
as
tell
I'm
you right
concerned.
now. We are at 1.7 trillion. All right.
Right.
So we're at 1.7 trillion. The U.S. stock market's 55 trillion. The bond market's 130 trillion.
But stop. But that's not fair. Bitcoin is not a market. It's a stock. And it's
Right.
actually one of the largest ones in the world.
Yeah, great. And it's still a rounding error when it comes to putting it in the context with the rest of the global macro environment. It's a rounding error. It's irrelevant.
So then Apple is a rounding error. Microsoft is a rounding error. Nvidia is a rounding error. Like that's what you're saying.
In isolation, yes. I mean, didn't
Okay.
Tesla just get cut in half?
So nothing matters. No stock matters.
It's not that nothing matters, Strazza. You're not listening to me. All I'm saying is that exactly what you said. All it takes is these institutions to buy a little bit, just a little bit, and that's enough to hold up the price. That's all I'm saying. I'm long. I hope it goes to 1 million. I'm not hating on Bitcoin. All I'm saying is that it's really small. So there's not that much liquidity out there. So all I'm saying is that it doesn't take much. Spencer asked if institutions were stepping in or what, we were kind of joking, but like the reality of the matter is it doesn't take much because it's not that big. That's all I'm saying. And by the way, when you talk about Apple, you also have Microsoft and you also have Amazon and you also have Meta and you have these mega cap tech alternatives and you have SPY and you have Qs and you have all these vehicles in which to express a very similar thesis if you're an institution with plenty of liquidity. With Bitcoin, you don't have that. You have one and there's not that much liquidity. That's it. That's all I'm saying.
There's so much
liquidity. I'm in,
there's...
baby. I'm in. I bought more on Thursday. I got the micro strategy. I'm probably going to buy more today. Like, I'm not hating on it all. In fact, what I'm saying is it's so small and irrelevant. That's one of the bullish catalysts. That's a tailwind, in my opinion.
JC, this is a mature market at this point. This is one of the largest market cap instruments, financial instruments in the world.
Yes.
And the markets are now incredibly liquid for Bitcoin.
Yeah. Yes. And despite all of that, it's still a rounding error.
Listen, Bitcoin
I'm agreeing
is like,
with you.
Bitcoin, I know, I just don't like you minimizing what has happened here because Bitcoin, I mean, it's impressive and it's been legitimized simply by its size over time. These institutions at a certain point have to get in. Bitcoin becomes bigger than the biggest stock in the world. Like they have to have exposure. They're being forced in because the market forces are like, hey guys, look over here. This thing's huge now and you totally missed it for 10 years. You can't miss it for the next 10. That's going to keep happening.
I'm with you, bro. I'm pretty sure we're like agreeing. You just don't like the fact that I'm minimizing the liquidity aspect of Bitcoin. But when I'm telling you that that's a tailwind, I'm not like hating on it. I'm long. I'm in, baby. Let's go.
I still don't think it works without stocks.
Okay, so then do you like my train of thought there where my heart is telling me one thing? Because I think you and I would both love that. I think a lot of investors would like an uncorrelated asset to participate in markets moving forward. That would be fantastic. It's like Christmas and Easter all in one, right? But the truth of the matter is we got to get back to the brain, not the heart, right?
You're right. This is probably not that asset that you're looking for.
All right. So what else stands out? Gold new all-time highs. What else is new? Copper hanging in there pretty good. 480 for copper. Yeah.
The Brazilians got upgraded this morning out here by Citi. So Stone Co.
The Brazilians. Is this like a spa thing?
I mean,
listen, Brazilians.
It's a show on Bravo.
The Brazilians.
The Brazilians.
Yeah, speaking of uncorrelated assets,
my cousin's dating a Brazilian now. He specifically looked for one on the Bumble app.
Yeah, I get it. People do that.
I just learned that. That's like a real thing. I'm learning all about these dating apps. It's fascinating.
Well,
the Bumble CEO is a woman. She's like, you guys don't know what you guys are doing.
Women are very specific on the dating apps, and I think it's time that men be very specific about what they're looking for too.
Yeah, Jose. It's a good egg. Shout out Jose.
That's great. I'm happy for him. Tell him to get long Real then, right? Tell him to get on board.
He's shorting the Dominican girlfriend.
It sounds like he already is, frankly.
Yeah, no, he's long the Brazilian girlfriend, short the Dominican girlfriend. He had a phase. He had a Dominican phase. He moved on. Apparently, I'm just learning this from Jose. Recently single man. So like single man and is 43 years old. So he's like, he's getting his mojo back. He's very excited about the Brazilians. There's a lot of them in Miami, apparently.
I'm just happy hearing this. I'm happy for him.
Yeah, me too.
Brazilian real is trying to hook higher, and I do continue to really like these stocks. Stoneco's getting a nice pump pre-market on the upgrade. And then
what is
else,
Stoneco? Is that a software company?
Financial software.
So it's like a fintech. It's like a Brazilian fintech. What could go wrong?
Yeah, right. But then a lot of downgrades. So analysts still chasing lower is what's been going on. eBay, Kraft Heinz, Macy's. I just bought something from Macy's for like the first time in 8 years.
Macy's
That's
still
exciting.
exists.
Yeah, yep, they're around. UNH, UPS. Did you guys hear about the recession for the trucking, United States trucking?
That's like one of the first things to go. Always.
Yeah, it sounds serious. And that's all I got for news.
Yeah, it's kind of a quiet news morning.
I think you got to be so careful shorting this market because every passing day, I think that Powell has more and more of a way to justify.
I wanted to throw up slide 3.
Wait. Yeah,
Sorry.
What? We hear you.
I think you got to
me?
be careful shorting here because, yeah, sorry. I think I cut out. But I think Powell can be justified in cutting rates. And he's kind of just playing games with Trump now. And if you think about it, he's a diplomat, right? And the smart political move for him, he's got a year left. He doesn't want to be harassed for the next 12 months. The smart political move for him is probably, if he can justify it with the data, to give Trump what he wants and just send a cut out there. I think that's probably coming. We got 2 Fed speakers on this morning. And if you hear them start to talk more that way, don't be surprised. The market will be paying attention to that.
So Boog Powell. So Trump wants Boog Powell to
That's a good one.
cut rates.
That's good.
Is that what's going on?
Yeah. He's just looking to blame somebody, right? That's what it comes down to.
He wants them to come cut rates and help him out a little bit here.
But also, Jerome Powell is in like his "I don't give a fuck" era. This is his last year on the job anyway. So
so like Fed governors have like eras like Taylor Swift.
Yeah.
Listen,
right.
Here's the thing. A lot of my favorite macro people that I listen to are now out here saying you're getting 3 or 4 cuts this year and one's coming sooner than the market thinks. The macro folks that I listen to. So Powell knows that. Powell's looking at the same data as them. He's going to give Trump a cut. He's playing, he's playing a little hardball here. They're both tough guys, 2 tough guys. So
Yeah.
2 tough guys.
Yeah.
So, we gotta figure it out.
So you're listening to Fed people, economists. Spencer, you listen to Taylor Swift when you exercise? You're at the gym? You listen to your Swiftie?
No.
You strike me as like a Swiftie.
I was back in the day. I'm definitely not now.
You know who one of them is that we should get back on? Warren Pies has been saying that.
Dude, can I just share a beef? Every time I'm gone, I'm on vacation or on a work trip or something, you guys bring in the best guests. Like, why do you do that? It's so
I let Spencer kind of run, the guest stuff, but then when you're gone, I'm kind of like, oh, okay, like who can I have on? I need somebody to chat with and hang out with. So I try to bring on some good ones because when you're not here, people miss you. I gotta give them a reason to watch the show.
Strazza's talking. I'm in the beach. I'm doing my work, but I'm also hanging out at the beach. And Strazza's like, you got to come back, JC. The people miss you. They think you're gone forever. And then I'm just like, yeah, well, they can wait a few more days. And like 2 seconds later, by the time I walked from my hotel room to the beach, the NASDAQ was up 12%. And like, I'm like, I don't think they miss me that much, bro.
Yeah, JC, can you start tweeting again? I can't keep answering questions about you.
Yeah. I literally tweeted out, I'm going to the beach. Like, I don't understand like why that's so complicated. Like, do people not go to the beach? Like, are these like these the people in the flyover states? Do they not go to the beach? Is that not a thing?
It wasn't that. It's that once you went to the beach, the market crashed and people thought that then you should have canceled your beach vacation.
They thought I should cancel my beach vacation.
Yeah, they thought, why is he not rushing home from the beach?
Listen, a great way to make sure that you're a shitty father is to cancel your vacation because some people on Twitter are butthurt that you're on vacation. Like that is a great way to be a terrible father. I was drinking champagne on the beach when the NASDAQ was up 12% for the record. So that was cool.
That was cool. We were eating sushi while the cryptos were crashing that night, and I thought that was really neat too. Weren't futures
And
down?
I was impressed with the relative strength in the Solana that night, if you recall. You thought I was crazy. As it turns out, I was just doing a basic arithmetic.
Okay, and then this is the point that I was trying to make. Ravi's question pretty much addresses it. It would be bad for the Fed to cave with a cut and destroy its integrity. That's what I'm saying. That's what people aren't reporting on the news enough, because the media just wants you to say, look at Trump being a bully to Powell and look at them fighting and how gross it is for America. That's what they're telling you on the news. What they're not telling you is, actually, if you look at the data, the Fed is data dependent. They could probably justify a cut right now. You're not hearing that story. So maybe Trump's not that crazy. He's saying, come on, cut, give it to us. Markets are tanking out here. We're doing this trade war thing. Help me out a little bit. So I don't think that, just like Robbie said, that they would ruin their integrity at all. I think they can come up here and start saying, hey, look at the data. It justifies a cut, and not make it about Trump and not make it about the fact that they were bullied into it. So I think that's exactly what you're going to see soon. Market will sniff it out, be on top.
As we've seen, the Fed really, unless it's dire circumstances, the Fed really can't turn on a dime. They have to telegraph it first, right? So they have to start.
You got 2 speakers this morning. They're sending them out here. Pay attention. They're going to start telegraphing it. They have 3 Fed speakers every day. So it won't take long. You're right, Spencer, right? But that's what I'm saying. Look for that to start to happen. I think that's what everyone is going to be watching here this morning. We got somebody at 9. Is it Brainerd?
But not everyone at the Fed is the committee that determines the federal fund rate. So keep that in mind. But
I don't know. They're on at like 9 or 9:30 today, and then there's another one on in the afternoon. We got 3 of them coming on, talking Fed things. So you're getting a rate cut soon. Is really what I'm trying to say.
And then when is this next this meeting that these Fed people do? When is the next one?
It's in May, right?
So not anytime soon. May 7th.
It's in May.
All right.
Mark Watson.
What do you say we bring in? Should we bring in the Warlock?
Strazza is 100% Trump boy.
I don't think so.
Trump boy.
Trump boy.
Is if Trump is Batman, does that make you Robin? I've been hanging out with superheroes a lot lately, so I got superheroes on my mind.
I say nice things about all these guys from time to time. What do I say about Powell when everybody's talking shit about him?
Strazza gives Powell props. Strazza loves Boog Powell.
So maybe I'm a Powell boy.
You know who probably loves Boog Powell also is John Roque. Probably loves Boog Powell.
No one even knows who that is, JC. Just you and me.
Warlock knows who Boog Powell is? No way.
I don't know what he's talking about, but it sounds
Steve
funny.
doesn't know who he is. All right, let's bring on the Warlock. Let's see if Kenny knows who Boog Powell is.
No shot.
I think he might.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Oh, Kenny Glick, what's up, my man?
Should I get my Baltimore Orioles jersey out of the closet?
Fair enough.
What
Okay.
did I say?
Powell, first baseman, large guy.
No, we forget that you're older than most of us by a lot. So,
Plus-
like, you were around.
Before stock market, I was a baseball card guy. So I traded cards. That's what got me interested in the stock market in the first place. So yeah.
Sounds right. Warlock, you're kind of like a superhero in your own right. Who is your favorite superhero of all time?
Oh wow. I'm an old Adam West guy, so I like old school Batman. Speaking of being old, I got a whole shelf dedicated to all that stuff up there. Hang on, let me see if I can get you there.
Wow.
There's all the Batman stuff up there with the stars. Yeah. I got them all. Anything Adam West or I got them all up there.
All right,
Nice.
because I got the boys all these superheroes and stuff, and so they got the old school Batman, Adam West. They got like the gray and black Batman, and then they have the all black Batman. So they have all, and they call it. They're like, "Look, Daddy, old school Batman."
Yeah, I love Dark Batman. I mean, I like the what was his name? Christopher Nolan put out some stuff, but what was the actor? Bateman or whatever, I forget his name. The Killer from
Dude, Christian Bale, and they're doing. Did you hear that they're doing another one?
No, I haven't heard.
Yeah, they're doing like another one. Apparently, Christopher Nolan and Christian Bale they're getting the band back together.
Oh, nice.
I like Christian. I like him as an actor in general.
Bane was great. That guy was sick, and Heath Ledger as the Joker was awesome.
Dude, I remember when they were filming that. I was working down on Wall Street at the time,
Yeah.
and like in the alleys, you could see the Gotham City police cars like during the day, like parked because they were shooting at night. You know, that was cool.
I had my office was at 2 Wall Street. We were filming it from my office outside
What
the
year
window.
was that? That must have been like 2010, 2011.
Yeah, exactly. 2010. Yeah.
That was cool seeing the Gotham City cars in the alleys. That
It was
cool.
just sick to see a whole massive crowd. Remember when they had every cop on the force running down the street? I have that on film somewhere.
Do you?
It's pretty
Nice.
wild. Yeah, it was right outside the office. Yeah, it's
You
crazy.
spent a lot more time with a video camera on Wall Street than I have over the years. So
Yes, I'm old. I remember having an office there. What a waste of money that
I remember
was.
going to your office. Actually,
Yeah, I used to pay about for a room maybe this size that I'm in, and we were paying $1,500 a month. So it was just silly.
It's not that bad. But
Yeah.
anyway,
Yeah.
Kenny, what's on the move this morning? We got the Qs up 1.15%, 200 points to the upside for NASDAQ 100 futures.
You want to hear something crazy? While the market was getting smoked yesterday, once again, I just found myself trading long. I was in Hertz after they sold it off. It became a really nice long above 7. The bull woke up for about an hour and a half. We traded the bull long. And then it was the Qs. We, had a short on the Qs, but really my best trade of the day was, Hertz and bull and that UPixie, which was what was the symbol? I forget the symbol because UPXI. It just had another couple of power moves, and I don't take those trades seriously because I know they're all pump and dumps. But while they're pumping, you can have some fun with them. So that was actually kind of cool. And again,
the good thing about pumping dumps is that the dump part is
it's just as good.
a choice. Choice.
Yeah.
Right. So, in fact, I love a good pump and dump because they move really fast.
Sure.
And I'm into it.
And there's 3 of them a day. I mean, there's 3 or 4 of them every day. Again, and the kids were all screaming and yelling about Hertz as the next mother of all short squeezes. I can't believe they're still using that phrase still, but. Again, if you're going to break VWAP and a whole number, I'm interested. So it was limited risk. I got involved in the Hertz. That was actually my better trade one of the best trades of the day. But today we got a huge list. So I'll give it to you right here. We're looking at Verizon because that one's gapped down. It's got some decent volume. Verizon under 41 is interesting. GE popping big, RTX, Lockheed Martin, 3M up big. So I'm looking for a possible comeback on that one, a little short action. Quest Diagnostics is GGX, and of course my old friend Halliburton. So I'm probably going to be watching Halliburton, waiting for some volume to come in. I've always had some good trades with Halliburton. So HAL, of course Kimberly Clark, my mom's one stock that she owns. So I'm going to be watching that. KMB. So a lot of choices, and each morning when we throw these symbols out. Then you got to know what they're doing with these symbols, right? So again, a lot of these stocks you could have a short on at one point, and again, the fade is completely different from the rest of the day. So sometimes, like yesterday, we went long the Qs for the first opening trade, and then that quickly got stopped out and became the short. So a lot of these stocks, when you're playing the fade, friends, that could be just an opening candle trade, and I'm talking about 30 seconds to a minute. Where if you have a stock that's gapped up big, the seller's just out there lurking, waiting to take profit. Something like GE, you could get a nice smackdown for 4 or 5 points, and then within 2 minutes, it's right back to the high of the day. So if you're playing the fade, you better have some good software ready to press those buttons and just take that quick money, and then you get back into the trend. Or if you're just new to this, my best suggestion: wait 5 minutes at least. 15 minutes is great because after 15 minutes, you get some ranges formed. And if you waited 15 minutes, you might as well wait till 10 o'clock because you have a lot of, buy programs and sell programs and economic data releases at 10 o'clock. So let's call it like 10:05 for the newbies. And there's so much action going on that even if you waited till 3:30 yesterday and didn't do a trade all day, the Qs making that turn at the end of the day with the 0-date options, we had some 50-cent calls on the 430s that we were banging out at $1, $1.52, $2.53. Some even made, I think I heard it went to $4. I was out by $2.50. But again, if you're doubling and tripling your money for fun at the end of the day, you're doing something right. So that was our day.
Oh, give us one more. Give us one more on the move this morning before we let you run.
Let's see. Which is the one? I just saw one go across the scanner. Everybody likes SOUN. So I don't know.
Yeah.
Something just popped on that one. But I'm going to stay focused. I like this the space that we're looking at right now. The defense stocks, the GE. So I'm going to stay focused. That was a lot of stocks right there. But if SOUN just came across the scanner, and again, I gotta keep an eye on Hertz. It's very liquid, has options. There's not much risk involved, and it's shortable. So loving some Hertz.
Yeah, it's Industrials Tuesday. A lot of industrials reporting today. Northrop Grumman, Lockheed Martin. There's a few others. You got RTX's report. I mean, just a lot of industrials. So keep an eye on the industrial space today and tomorrow, guys.
Quest Diagnostics. Quest also is a big and hasn't really had any really volume. So just waiting to see what happens here. You got 3,000 trades, 3,000 shares on the stock that just reported earnings. It's not going to probably stay up there at 170, but we'll take a look.
All right, it's an earnings bonanza. Guys, don't forget, you're going live this afternoon. Kenny and JC are going live at 3:30. I dropped the link in chat. The URL is also on the screen. It's hitthebid.com/watch-live. Pretty easy to remember. The guys will be there live, obviously, right, at 3:30, doing the run-up into the earnings. We got Tesla tonight. That's the big one.
Yeah, we can stay live into the number. Look for the knee-jerk reactions.
Yeah, knee-jerk reaction. You got Tesla, Intuitive Surgical. You got Chubb. Tesla's the big one. Let's be honest. Tesla's the big one. So,
yeah.
All right, 3:30 today. Kenny and JC are going live. It'll be on the site. It'll be on YouTube. Check it out. We'll see you there, guys.
All right, good luck. I'll see you guys soon.
All right. And on that note, should we bring on today's featured guest?
Please.
You want to give him one more introduction, or I think
guys,
bottom line.
Guys, if you guys are new here, this is to me, this is one of the best technicians of all time, up there on the Mount Rushmore of technical analysis. Has been a huge inspiration to me and many other technicians out there. He is a technician's technician, also a big sports fan. A lot of sports analogies. Always a fun conversation. We are very lucky and blessed to have Mr. John Roque here. Spencer Israel, shall we? Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. John Roque, how are you, sir?
Hey, JC, thanks for the nice introduction. Always great to be with you. Thank you very much.
Not bad. You see how I did that? I could DJ. I'm like, the DJ of technical analysis over here.
Very nice.
John, are you doing more charting or more umping these days?
Probably more charting in this environment, but I'm still doing a good amount of umping, so thanks.
Good for you. How the knees? Knees holding up okay?
So far, so good. Get loose, get warm, and get behind the dish.
All right. No, I like it. You don't take any crap. You give it to them, right? You tell these kids.
I just try to be firm, and I'll tell you, I make it a point to tell the catcher that the two of us are working together. We're allies back here. We are not enemies. You help me, I'll give you anything you want. You want to go to Dunkin' Donuts during the game? I'll stop the game. As long as you work with me, we're a team back here. And so far, I've gotten along great with all the catchers that I've worked with. And if you see them out on the street, maybe at the pizza place or at the mall, they're all polite. So I want to keep that going.
One more question on the umping. So as a pitcher, I always like the catchers that could really frame it nicely. Like I know it wasn't a strike. The hitter knows it wasn't a strike, but the umpire, maybe he didn't know. How do you think about the framing like that, out of curiosity?
Well, if they have to frame it, then it's not a strike.
But what if they're really, really good at it?
Well, I mean, listen, if they're good, they're good. But I'm curious now because Major League Baseball is going to go to some sort of a, I'll use robotic for lack of a better phrase, electronic eye kind of balls and strikes. And now catchers, set up on one knee, with their leg outstretched to kind of frame every pitch. That's going to be an art that will move into obsolescence because, I mean, what are they going to say? You can't frame it against a machine. The machine's going to just have it perfectly set up. So I'm interested to see how that works out.
All right. Listen, I love the baseball conversation.
Thanks.
John,
too,
I want to
always.
get into the markets. We've got a lot to talk about, but some people, Maybe they've been hiding under a rock their whole lives. They might not know. They might not be familiar with the legend that is John Roque.
Well,
John,
let's
when did you
not
get into
forget
this business? How'd you get into this finance stuff?
So I got my MBA from Fordham University a long time ago, and we looked for jobs via the want ads in the New York Times. Everybody bought the Times on a Sunday, and there was a big want ad section, and I found a place in White Plains, New York, that were looking for a research assistant, and he did macro work. His name was Ken Safian, and I applied for the job. He hired me, and I worked for him for 4 years. He taught me a lot. I'm very thankful to Ken Safian.
And not to call you out, but what year was that?
Oh, so that was 90 through 94. And then I went to work at Lehman Brothers from 94 through 98, and I worked for a guy named Steve Shobin, who I would say is the most, I would say the most instrumental guy that I met in my career, because he answered every question I had, and I had millions of them. And he encouraged me. I read all the books. I went to go see all the guys present at the Market Technicians Association, which was what it was called back then. I met all the guys, and I learned a lot. Steve encouraged it, so I'm as grateful to Steve Shobin as anybody I've ever been grateful for. Then I got to work at Arnold and Blythe Schroeder for a long time, which was curiously where George Soros got his start in the business. He worked for the Arnolds, and after that, I had kind of an ill-fated stop at a small firm that's no longer in business. But then from there, I was able to work at Soros Fund Management for 4 years. I worked for the current Treasury Secretary for 4 years, and then 3 years for him again at Key Square Capital Management. Then I came back to the sell side, and here I am at 22V Research.
Love it, John. I could tell you for a fact, early in my career, probably mid 2000s, I remember vividly seeing you give presentations at the Market Technicians Association events, maybe the Millennium Hotel, if that rings a bell.
Yeah.
Could have been.
Yeah.
And, I played baseball my whole life, football, basketball. I mean, so like your sports analogies with the market always resonated with me so much. Any comparisons that, any reason other than just your own passion for sports that you're always talking about both?
Well, I think baseball is the most applicable because it's the longest season. You don't have to get them all right. I mean, you could be in the Hall of Fame and just get 3 out of 10 right. You could probably get fewer right, but still knock in a lot of runs. When I was at Soros Fund Management, I also worked for Robert Soros, and I used to ask him questions about his father all day long, all the time. I've met with Robert every single day. And one day I said to him, Robert, did your father have a higher batting average or a higher slugging percentage? And he said, John, my father's batting average was terrible, but his slugging percentage was great, which meant that when he was right, he really pushed all his chips to the middle of the table. And so I think baseball has a very nice kind of link up with what we do in this business because it's a long season. It's every single day. Some days, I mean, you couldn't hit water if you fell out of a boat. And then other days, I mean, just putting your shoes on and it looks like you're hitting line drives all over the lot. So I think this baseball is the most applicable.
Listen, to be fair, as a Knicks fan, it probably feels like a really long season, I bet, with basketball, right?
Always.
All right, John, listen, one of the best things I've ever learned from you is that we're not in a reversion to the mean business, but we are in a reversion beyond the mean. When you talk about that sort of thing, are you talking specifically about price, from oversold conditions? Are you talking more about sentiment and positioning? When you talk about things like that, are you talking about both, right? How do you think about that phrase?
So I'm mostly thinking about price. And so I thought about that reversion to the mean. People would say that kind of, willy-nilly in all sorts of meetings. Oh, it'll revert to the mean. And I would always say to myself, under my breath, over what time frame? I mean, what time frame are you telling me about? What's the high and low in the range that you're talking about? And then, of course, I came up with another baseball analogy around that. And I said, we'll use you. J.C. Parets played 12 years in the majors. He played primarily for the Cardinals. Over his 12 years, he hit 297 in the majors. How many of those 12 years did he hit 297?
0.
Exactly. So that's why I thought about reversion beyond the mean, and I think that's more applicable. So, the reversion beyond the mean kind of fits in our business with oscillators as well, right? it oscillates around the mean is what it really does. It doesn't revert to it. And a good example right here, if any of them, if any of the people on this call, or and I'm sure you're doing this already, are looking at the 2s, 10s yield curve, you'll notice that if you go back to 1989, the 2s, 10 steepener, the average is 100 basis points, but the top of the range is 250 basis points. The smallest rally it got to on the upside was 150 basis points, but its average is 100 basis points. So this is a great example of a not reversion to the mean example, but a reversion beyond the mean example.
Why don't we just stick with that? So as investors, let's say you trade equities, why should you care about the 2s, 10s curve? What does that mean to you?
Well, I'm going to say that in this environment, and I've thought this is so for some time, I don't necessarily believe that we need to correlate assets, which is a half of an answer to your question.
Yeah.
It used to be in prior cycles that you did correlate assets. For example, here's a long-winded answer to your question. JC Parets and I are hired on the exact same day. We go to work for Lehman Brothers. We're sitting on the trading desk, and we're working for our boss, our mentor, who's got a lot of gray hair, and he's wearing a pinstripe suit. And on the first day, he says to both of us, keep your mouth shut, keep your eyes, ears, and notebook open, because I'm going to drop pearls on you for as long as you're sitting next to me. And JC and I listened to what he said. So every day we came in early, read the Wall Street Journal, checked the news, checked the charts, and we waited for him to come in like two puppies because he was going to give us nourishment. And he dropped pearls on us for 6, 9, 12 months. One day he comes in and he says, JC, what have you noticed recently? And very eagerly, JC raises his hand, jumps up, and he says, boss, I've seen A. I noticed A is happening. And boss says, very good job, JC. He says, John, what have you noticed? I said, boss, I noticed B. B is happening. And he said, good job, grasshoppers. JC noticed A. John noticed B. What are we supposed to do? And in unison, we yell out, we're supposed to buy C. And the boss says, you learned your lessons very well. I'm ready to promote you. That's not the way it works now. And I'm going to tell you why. Because the algos don't know that A plus B is supposed to equal C. Number two is there's so many pod shops in existence these days. They don't care about A and B. They might only care about C.
What do you call it? Pod shop?
POD, pod shop. Like a Citadel, like a Millennium.
Oh, okay.
Like a Balyasny.
Oh, like a multi-strat. Like a multi-strat.
Yeah, correct.
I've never heard that term. Pod shop? That's a new one.
Yeah. And so in an algo, they have a decision tree that's, multiples of what we would have. Our decision tree is maybe 3 or 4 items when we come in. I heard the guy you spoke to as I was waiting in the waiting room talk about a handful plus of trades. I mean, if you get shut out of 3 of those, you have to go back to the drawing board. The algo doesn't. So if it sees A, it does A. If it sees B, it does C. C might never occur. G might occur. L might occur. X might occur. And so that's the way I think about this. So if I see A, I should do A. If I see B, I should do B. I shouldn't worry about whether C will occur. It might not occur. And if I'm waiting for it and it doesn't occur, I'm shut out. So more to your question, what do the 2s, 10s tell me? It tells me that the treasury yield for the 2-year is going down faster than the treasury yield for the 10-year. I should be long 2-year price. That's what it tells me. What does it mean about equities? I don't know if it means anything about equities.
Yeah. Not anymore.
Yeah, that's the point. And you might say, because this is what you do, because you're sharp, you say, well, John, it might matter for equities. And I'd say, well, then maybe we'll get the evidence in the equity market. Then we can look at that.
Yeah. It might be good for regional banks.
It might.
No evidence of it yet.
Yeah, but if I see the 2s, 10s, and I'm waiting to trade regional banks and I don't have an entry, then I'm letting the 2s, 10s go by the wayside. I don't think that's the case. I should be involved there.
John, we had the S&P 500 up 24% in 2023. We had a 23% year last year. Some would argue that sort of behavior is something you see in bull markets, right? What about something like we've seen so far this year? You think we're still in that bull market, or are we in a different regime? Does that even matter?
I'm going to say that we're in a bear market. Okay, because you don't get multiple days of 1,000 new lows on the New York Stock Exchange and 1,000 or more new lows on NASDAQ unless you're in a bear market. That's number one. Number two is every one of the big seven, as I call them, or the Mag 7, are down 20+%.
Mm-hmm.
You've had a bear market there. So NASDAQ came into a bear market, percentage decline. The S&P was down 21%. The Russell was down much more. So you've had a bear market. This is not an insult. We have had bear markets before, and we'll have them going forward. I think this one is especially intractable, for lack of a better phrase, because, and I'm going to give you my take on sentiment, if you don't mind.
Please.
Okay, so when Trump was elected, and what I'm going to say is not political, so please, no comebacks to me with respect to a political comment. I'm just giving you it.
You must be new around here, John.
Yeah, I'm sure. So when Trump was elected, he was thought to be the most business-friendly president ever. And he hired, let's say, a cabinet of all-star appointees. Okay, fine. So there was a big rally post the election. And then he started to talk about tariffs. And the street said, there's no way he's going to do the tariffs. There is no way. There's a Trump put. He's going to blink. He's not going to do them. And then as he came into office in January, the market started to say, wait a second, he's serious about these tariffs. Let me try to understand the tariffs. While they did that, JC, they did not inoculate, or they did not protect or put a moat around their portfolio. While trying to understand the tariffs, the market was coming in sharply because the market was well ahead of the sentiment. And it was only in the end of March, toward the end of March, and even into early April, that most market participants said, wait a second, this guy really is serious about the tariffs. Wait a second, there is no Trump put. Now I need to, protect my portfolio. So I think the sentiment was screwed up. And now the sentiment is he's going to blink. I don't want to miss a 15% rally. So I think it's very difficult here with respect to the sentiment. Now, you know this as well as I do. On a daily and weekly basis, both the S&P and NASDAQ are oversold. We should bounce. We had a 13% bounce over 2 days from April 7th through April 9th. We had a 16+% bounce for NASDAQ. Bear market rallies are not uncommon. From the year 2000 until the 02-03 low, NASDAQ had 15 of them. 15 bear market rallies. Some of them were as short as 2 days. The biggest one was an up 50% rally. I think it was in 70 days. So you can have bear market rallies. So I don't think it's extraordinary that we do. So I think that we can have a bear market rally here, but I want to sell S&P 5,400 to 5,500, and I want to sell NASDAQ 17,000 to 17,500. But I do think we should have a bounce, but I want to sell that bounce.
Yeah, these bear market rallies, not only do they tend to go up, they tend to go up more than bull market rallies and faster, right?
Much faster. You're correct. Much faster.
Yeah.
You're right.
When you go to the Stock Traders Almanac and you go to the last pages, you know how they sort like the greatest days ever, greatest weeks ever. They're always in the worst times.
That's correct.
Yeah.
I mean, here, listen, I'll just give you, I'll give you an idea. I have the table with me. So the average bear market rally for NASDAQ from April 2000 through the lows in 2022 was 17 days, and you got 23%. The median was 9 days. You got 20%. The smallest was 2 days with an 11%, and the max was 75 days, 51%. So you can have them. So if we get them here, I think we should be aware of what they are, but they happen in bear markets.
You know, I'm pretty sure it was you, John. I like to give credit where credit is due. I'm pretty sure it was you who taught me that we don't have bull markets without financials. Was that you? That sound like
thanks.
you?
Yeah, I'm gonna say that's my line. Yeah.
Yeah, I'm pretty sure. I take all kinds of stuff from you. I always quote you, by the way. I'm
Thank
like,
you.
I learned that from Roque. So I do
Thank
the
you.
best I can. So, okay, so I know for a fact I got that one from you. I thought I did.
Thank
So
you.
when I think about that a lot, we don't have bull markets around here without financials. When you look at financials, whether you look at the European ones or the Indian ones or the Japanese ones or the American ones, they don't look terrible, right? They're holding up way better than a lot of the other stuff, right? So when you think about bull markets, when you think about financials as a representative, as an important component of such things, when you look at the current markets and you see the relative strength worldwide in financials, like, what do you think? Like, what does that mean to you?
Okay, so the regional banks were down more than 30% from their highs. So we'll carve those guys out. will say that the European banks, SX7E, has held up pretty darn well. So good for them. And I'm glad it's happening. And the Topics banks also came in pretty hard in Japan. I think a rally there is not going to be able to produce a new high, but they've held in, albeit after a very sharp decline. I like to think of it as follows. Number one, JP Morgan is the most important market bellwether extant. So you could go back to the early 90s and say, did JP Morgan corroborate or confirm the S&P's move? If it did not, the S&P's move is likely not real, both up or down. And if the S&P goes up and JP Morgan's going down, that should, make you question that move. And if JP Morgan's going up, there's almost no way the S&P goes down. So JP Morgan's a terrific bellwether. Number three is, I like to think that while tech is a good look inside the market, I think financials are a good look inside the economy. So maybe you have kind of another way to think about it. And so this would be number four. So I went back to, I guess back more than a decade. So there were 4 prior bear markets for the investment banking group. Primarily, it's Goldman and Morgan. Schwab is also in that group, but primarily Goldman and Morgan. And what you'll notice over the last decade plus is that each bear market for this group had 2 down legs. 11 into 12, there was 2 down legs. You were down 50%, then 32. 15 into 16, you were down 20+%, and then 32%. 18, and then into the COVID low, you were down 40 and 46. And 22, 23, you're down a third, and then 26%. So each of the 4 times you had a second down leg, and this time you're down 30% from peak to trough. So if history is any guide, then maybe we'll have a rally here and see another down leg. And if the banks then investment banks make a low, or they retest and they hold successfully, then I think we're in pretty good shape. But I'm going to wait for that kind of next move in this group to transpire. So that's why I think the financials are so important.
John, you talk about how you want to be a seller of S&Ps 5,400, 5,500. I don't disagree with that at all. In fact, I would argue that the S&P 500's ability to overcome those levels and break back above 5,600 would be quite the bullish development for the overall market. Would you agree with that? Is that why you chose those levels?
So I chose those levels primarily because that's kind of where the last group of resistance is, or some sort of churning. And it was after the 2, or right around the 2 downside gaps that occurred in early March. So that's the reason I chose those levels. However, I would just say that while the S&P is daily and weekly oversold on my work, and I do this using a percentage MACD indicator, so I try to normalize all historical declines. The S&P is not oversold on a monthly basis. Now, you might say, John, it might never get there. And I'd say, okay, that's fine. It might never get there. That's okay. So another thing to consider is, and perhaps, your listeners have done this, is that if this is a real bear market low, then you don't have to buy it because it's good for years. And if you just look at the S&P 500 along with the 12-month moving average, and I've tried over time to eliminate indicators and make it as simple as possible for me. If the S&P goes through a bear market, it then kind of repairs itself and gets back above its 12-month moving average, and that moving average slopes upward, you're pretty much good. You wouldn't have had to buy the low. I know we want to assuage our egos because we want to buy the low, and we want to say, hey, JC, I bought the low that day. And you say, man, that's a terrific trade. Man, that guy got it really good. But those things are so hard to do.
Yeah, but those people are just resulting. Just because it resulted well for you doesn't make it a good trade.
I like that, and I'm gonna give you another sports analogy. You remember how Ben Roethlisberger hit Santonio Holmes in the Super Bowl in the corner of the end zone?
When he dove, yeah,
correct. And he toe tapped his way into the corner of the end zone. Most guys in our business want to make that trade. I don't want to make that trade. It's too hard. I want to make the Joe Montana trade to Roger Craig, where he hit Roger Craig in the flat for 4 yards, and then he ran for another 3 yards. And then he hit, Roger Craig again in the same play. And then he went down the field for Jerry Rice for 40 yards. Those are the trades I want to make. I think the Ben Roethlisberger trade is way too hard. People in our business want credit for making the hardest trade. I don't want to make the hardest trade. I want to hit the ball up the middle. That's all I'm trying to do.
That's great. Again, you know, I love the sports analogies. It makes so much sense to me. I hope other people love sports as well. Can we I talk about all the time how I used to be a gold bug, and we'll finish with this and we'll let you run. I appreciate the time today, John.
Of course, thank you.
I used to be a gold bug in the 2000s, and I'm not gonna lie. Some of that had to do with you. You know, like you and Luis Yamada and some others were the first ones that kind of taught me to denominate other asset classes in gold, price the Dow and the S&P in gold. Look at gold price in other Forex markets. Like, you know, gold really became a big part of my overall market outlook during those 2000s. And for sure, you certainly had a role in that. Then, you know, we peaked in 2010, 2011, precious metals peaked, did nothing forever, and now off to the races again. You know, you want to talk about, you know, making the easy catches, you know, the precious metals market, you know, I look at these, you know, how long these cycles last in precious metals. And historically, they don't last only a few years. Historically, they last a long time. And we've seen it before. Do you think this time is like all those others?
So I think what you just said is really key. You said that these cycles last a long time. I'm going to give you an idea how long they last. Going back to the 1920s, we are now only in our fourth cycle, only the fourth one since the 1920s where gold has outperformed the S&P 500. So if this were not your show here, the morning show, and this were your statistics class, and I brought this up, you'd say, John, stop embarrassing yourself. You can't submit 4 examples over 100 years. And
it's all we got. It's all we got.
So you're right. I think I can submit it in portfolio management class.
Yes.
And here goes. In cycle 1, which occurred as the Dow was peaking in the late 20s. Now remember, gold was essentially fixed at a price. It was raised incrementally, maybe twice during this period, but it was essentially fixed. So the S&P was down 80%, gold went up 30%. In the second cycle, which was from the late 60s until the early 80s, the S&P was up 16% and gold was up almost 1,600%. In the third cycle, which occurred starting in the late 90s and went until about 2011, as you said, gold was up almost 600% and the S&P was down 20%. In this current cycle, which kind of started in 2019, we'll mark it there. Gold's up 80% and the S&P is only up 7%. So I've said, and this is a chart that I send out to my clients and to the people who participate in my webinars, the turn for gold relative to the S&P is at its highest level in almost 11 years. Prior up cycles where gold has outperformed the S&P were lengthy and agita filled for equities. So they do last a long time. That's, I think, an important input here. And you are right on the money. Gold's not only bullish in the dollar, it's bullish in 9 currencies. That's how many currencies I price gold in.
So you only price it in 10, the G10? That's it?
No, I did Indonesia just for the heck of it.
It looked great. Price in lira. It looks great.
Yeah, correct. Done it in pesos. I just wanted to have kind of a broad swath. And then I've done silver in those currencies as well. And silver is also consolidating to bullish in those currencies. So these cycles tend to last for some time. And I'll also say that in prior periods, you could not have a commodity bull market unless you have a gold bull market. You have a gold bull market, but we don't have or don't yet have a commodity bull market. So if, maybe this is something for, people to put on their screen, some sort of commodity, measure, some ETF or commodity index and say, give me an alert. When it's done this, it should alert me so I don't miss this because I know gold has historically proven these clues. Now, I'm going to not contradict myself, but I'm going to go back to something I said early in the show. I said A plus B doesn't necessarily equal C. We have a gold bull market. We have a silver bull market, but we don't have a commodity bull market. I shouldn't be trying to buy wheat. I should be buying gold and silver, or I should have been buying gold and silver.
But if gold and silver are doing well, copper making new all-time highs, I understand A and B doesn't equal C, but man, energy's got to be next. Don't you just set your alert in that XLE chart going back to 08, and when that thing starts making new all-time highs, then isn't that the move?
There's 17 years of resistance up there. I would love to see the energy group pick up. It would give us more to work with. It would add another quiver to the commodity kind of, sometimes theme here. Yeah, I'd love to see that pick up. I'd love to. Corn is the best of the ags. That's trying to turn. The others are not yet there. So I'd love to see something work here. And I think if we get the commodities to work, you'd get more of the value side to outperform the growth side. That's something else that I would think about, but I'm not using that as my raison d'etre here.
All right, John Roque, ladies and gentlemen. One last question. Lifelong New Yorker. Best pizzeria in New York, any borough? Go.
Johnny's Pizza in Mount Vernon, New York.
Johnny's? How did I know you were going to like Mount Vernon or like New Rochelle or one of those? How did I know?
Check out Dave Portnoy's review. Check it out.
Okay, well, in
Johnny's
that
Pizza,
case.
Mount Vernon, New York.
All right. You're such a homer, dude. You're such a homer.
I am.
All right, ladies and gentlemen, John Roque.
Thanks,
Thank you, sir.
Always a pleasure. Thanks for having me.
Appreciate it.
Thank you.
That was great. Come on.
That was great, actually. That was really good.
And he's right about Johnny's Pizza. It's one of the ones people
let's
drive.
go. Okay, let's go.
It's excellent.
Spencer, you have to cross a river to get there. Are you down?
Yeah, I've never been up on that side of the Hudson before.
It's just like I've never been to the Bronx.
Like that far. Actually, that's not true. I've been to like Scarsdale and stuff, but yeah.
Have you ever gone to Arthur Avenue?
Yeah, of course. I was
okay.
Yeah.
Do you not take I-95 ever?
So it's Johnny's Pizza in Mount Vernon? Johnny.
That's what he said.
Okay. Johnny's.
I've never been there. I've never been to Mount Vernon. I don't know.
Dude, he's
Portnoy. Fun fact, will tell you that Connecticut's pizza is better than New York's, though. He helped put New Haven on the map, actually.
But he's from Massachusetts. What are those people? Come on.
I don't know. All right. I don't know if Patrick is going to join. You better join soon because I know
we've got spaces today at 11.
I know.
So if you're not doing anything at 11, I can't imagine what you could possibly be doing late morning that is more important than hanging out on the Technical Tuesdays spaces, right?
Spaces are an important part of my process. It's like we all get together once a week and I get to hear what all my friends think.
And we get to invite other people. Yeah. I say we like I'm the one doing it. Other people get invited. It's not like this where it's like a dictatorship where like we're having John Roque, and if you guys don't like it, tough shit. Right?
We want anybody to come up and ask questions. It's actually fun when that happens, but it's similar in the sense that like these are just conversations that we'd be having, right? And we're just having them live on Twitter or YouTube.
Let's we'll hop early today, guys. But I want to hear your go ahead, Spencer, and then we'll finish up with Rogue.
I just wanted to show it's Tuesday here on the calendar. So we got Spaces at 11. We got Mackey's Retail Roundup live at 1. Jeff is going to run through, I think, the big box retailers today, give his take on that. A flow show being recorded, Steve. And then what's not on the calendar is, as I mentioned earlier, JC and Kenny going live at 3:30 p.m. Eastern time, right here on the channel, on the site. Where's that link? Here's that link. hitthebid.com/watch-live. Very easy to remember. Copy it, paste it into your browser. 3:30, going into Tesla. One of the more interesting earnings reports because of what they say, frankly, right? Not so much from the market, but just, from the market. It's a huge company. So that's the plan today. Spaces, Mackie, the flow, and then
what a
Jason
day.
Kenny.
What a day.
Big day on the
channel. The day off started on a great note today with legend John Roque. What was your favorite part of the interview, Strazza?
I thought it was a little strange that he chose Santonio Holmes for the analogy. There have been some great catches in the Super Bowl.
Especially as a New York guy. You would think that he'd bring in.
That stood out.
What, the helmet?
Yeah, that was kind of a big one.
Yeah. All right.
What are you going to do?
I've been watching Jeremy Shockey highlights all morning, so I'm feeling nostalgic. Okay. Can't help
all right.
myself.
Shout out Hurricanes. Spencer Israel.
Shout out.
Your favorite part of the interview?
What was my favorite part? That was a good concept about not going for the hard trade, going for the easy trade. So that's probably going to stick with me. That's the thing I'm going to like remember the most from that is just like go for the easy trade. Don't Don't try. Don't make your life harder than it has to be, right? So,
You want to catch the meat of the trend. You
Right.
you want the meat.
Yeah.
Right.
I would agree with that.
All right. Shout out to global equity markets. Everything. Shout out to the U.S. stock market. It's looking good today. All right.
Do you love the fact that international stocks are beating the ass of U.S. stocks day in and day out?
Me?
Do I love
If it makes you happy.
No, I wouldn't say I love it.
I love a
Some
good
people are very,
unwind.
very happy that they're losing money out here. I don't know if you guys
No,
know.
I like a good unwind. I like it. You know, I'm always talking about how the best time to kick someone is when they're down, and that's what's happening, right? You've got all these investors with so much exposure to the United States. They have no exposure internationally, for good reason. A lot of home country bias, but a lot of recency bias as well. And you're seeing that unwind, and I don't feel bad for anybody.
People are overreacting. I don't think U.S. stocks are down. Nobody's kicking anything while it's down. Go look at a chart from like Southeast Asia. Maybe you could say that for them. U.S. stocks have been the best game in town for 15 years. They're not down. They had a bad couple of months, right? And the amount of just overreactions and just insane bearishness that I'm hearing. And also, you're seeing this on some of the sentiment indicators, like this uncertainty indicator that apparently tells me how uncertain the market participants are feeling. We're in a more uncertain environment today than at the depths of the financial crisis. Yeah, that's good
And
data.
COVID.
Some of these things, just throw them out. You know what's funny? I was thinking this morning on my walk, it's almost like there was a note out from the IIF. They call this a manufactured recession. It's almost like this is the right-wing version of 2020. Right, they're talking about they're shutting down all the small businesses, right? The Republicans are just ruining small business in America. I remember a time back in March, April, May of 2020 when it was just the same case done by the other side. So history does repeat itself, I guess.
Someone give me a broad international fund that doesn't suck, because they all suck. Okay, that's the thing.
IBGK.
Freedom. What about Perth's fund? Freedom.
Okay, you're right. That's maybe
He
that's,
wants
More
something
emerging
more
markets than developed, but still.
yeah.
Freedom's emerging. It's going to give you a lot of emerging, but just VGK is so good for Europe. Vanguard does a nice job.
I don't know, man. You zoom out, they all look like crap.
Be careful. Be careful with some of these. Like if you look at the Global 100,
I can't, man. I can't.
Like the Global 100 ETF is 80% US. So
Spencer,
Global's a little exaggerated there.
buy the giant bases, buy the EWG, buy the EWQ,
I know. I have to go region or country specific is the answer to my question. But my point was
something like EWG. That's a pretty safe fund. That's you're not owning emerging market stocks. You're owning German equities.
My point was the broad international ex-US stuff looks terrible. So, and I owned VEU, which is all world ex-US for 8 years, and it was
I like VEU
garbage.
I like VEU. Yeah, well, you owned it for the wrong 8 years. Own it for
I guess so. I guess I did. What are you gonna do? Shit happens. All right.
I got one more chart. One more chart. Can we just do one more?
Yeah.
And then we'll finish there. Check out the new slide 2. You know, as it turns out, Strazza, you saw that quote that we don't have bull markets without financials. That was a John Roque-ism.
Yeah,
saw that?
It is.
I'm telling you, there's so many John Roque-isms, some of which we haven't discovered yet, and we'll discover that I originally got it from him. So, all right, we don't have bull markets without financials. Big level here for financials. We rallied into that last week, rolled over temporarily anyway. A breakout there above 48, I think, would be a big one.
Bitcoin is absolutely pumping out here. Next stop 90.
Okay, but are we gonna get above 90? Is that the question?
We're at 90 right now, and that is the VWAP from the all-time high.
What's the exact VWAP? What's the exact VWAP?
89,963. We're currently trading through it. Bitcoin really pumping this morning. It's basically at 90 now. Dude, a breakout above that VWAP puts you at 110. 108, 110.
I mean, I'm in. Let's go. You know, it's such a little irrelevant nothing of a rounding error of an asset class, right, Strazza?
You can make so much money trading the waves in crypto.
I was
the Elliott waves.
Yeah, that's what I meant. I was alerted. I stumbled upon a Twitter thread yesterday of someone had just compiled a bunch of it was copy and pasted of tweets and messages from like the last crypto like bull run, like 2021 or whatever, and some of the messages were hilarious. Bitcoin is incapable of crashing. Mathematically can't have bubbles. Just very funny stuff. But anyway,
apparently Gasparino's reporting that Elon Musk will be announcing basically what Dan Ives asked for him to do, which is some sort of clear pathway of leaving Doge and going back to Tesla, because that stock needs to reduce some of the uncertainty.
You know what? I was noticing that, was it a week or maybe 2 weeks ago? He's been quiet, Elon. Just the volume of Elon noise has gone way down, right?
Yeah. So Tesla investors expect that Elon Musk will provide clarity on when he will completely disengage from Doge during a Tesla conference call after the closing bell today.
All right, we'll find out. So we'll see you guys full slate today on the channel. Be there for Spaces in like a little over an hour, and then stop by with JC and Kenny at 3:30. Go make some money. All right, it is 9:43. Markets are open. Things are going up. We're in a good mood. Let's go.
Shout out GE, great American brand.
Okay.
Shout out Connecticut.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off.